Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar has continued to hold its bullish bias as it pushes through that 72.40 resistance overnight. However, as you can note here from the 4-hour time frame, the pattern is actually getting slightly tired as it approaches that firm resistance of 73.20. In light of the current pattern, I do expect to see further supply to return from that region, and any upward advance towards should fail from that 73.20 and look back to the immediate support of 72.35. It is viewed a breaker there would give further exposure to the downside and look towards the support of 71.40.80 and reassess from there. The recent rejection from 103.40.50 level plus the weakness returning in the US dollar overnight has given some scope now towards a resistance of 105.20.30. It is viewed from either from that level or above at 105.80.90 supply will increase. I do anticipate a rejection from there and see the market eventually take the downward challenge towards that 103.40 level. A break beneath 103.40 would give further exposure to a target of 102.40.70 and then lower towards 101.60.65. Dollar yen, since the attempt to the upside and the rejection from that 118.30 level, now looks back to the support of 117, figure 5. Although we have seen a mild test there just recently in the last couple of hours, it is anticipated that from the technical point that we could see one more challenge towards that level. Now, a break beneath 117 figure would give further exposure to the downside, but I do anticipate demand returning from 116.30.35 with the firm support holding beneath at as you can see here, at 115.25.40. In view of the current pattern, I do expect to see this weakness to soon fade and look back towards the upside and claim the highs of 118.30.50 and then on towards 119 to 120. The sterling price action a little bit firmer overnight, considering that we had a slightly softer US dollar. However, I view the market towards 123.60 to 80 as a firm cap, and we should expect to see supply return and knock the prices back down towards 122 region. A break of 121.60 would give further exposure down towards that 120 to 118 that was recently contested late last year. The gold continues to show anticipation towards the top side as the market challenges the 11 resistance, that is 11.68.70. From the technical point, from the 4-hour chart, we are seeing weakness returning. Excuse me. And if we do see a rejection from that 68.70 level, then we could be looking back towards that key support of 11.46. However, a break above 70 would give further scope up towards 11.80 as a stop loss move and then eventually turn back towards the downside. Wrapping up with oil, well, it looks to me that the rejection from that $55 area can still play out, but I'm a little bit cautious purely for the fact is that this is a key reversal. Now, a key reversal is when the market opens above the previous day's high, a new high, and then closes and records a new low, as you can see here, a clear key bearish reversal. Now, what would negate this view is if we see a move above 54.40. This in terms would give further exposure to the upside and negate this signal and probably see a rally up to 56. However, this is a strong signal, and while holding, should eventually see the market fall towards 49.60 and reassess from there. So that wraps up my daily video. Thank you very much for joining me. And as always, look out for the intraday report that will be released very shortly.